Welcome back to my YouTube channel, dear learners. Today we are going to talk about financial statements and analysis. Well, we have discussed about accounting, what is accounting, the meaning and concept of accounting in the previous video. If you didn't watch the video, please go back to the video. And the first video we have discussed about accounting, about the terms which are very crucial in financial statement we have studied. Um, of course, we studied about the financial statement as well. We learned what's a financial statement, which is the product of financial accounting, and it's prepared by the accountant. Um, when the financial statements, um, all the data which is being collected through the reports and schedule and some notes, and we have collected. We made a statement and create so many by of course those data are certainly there are transactions which have been occurred during the year, and we those transactions bring into the financial statements, you know, for the purpose of evaluation of financial position of the business. Well, it means the worth of business, whether our business is declining or in a growth position. So that's what we are, after analyzing comprehensively the financial statements, we are going to take a decision. And for that reason, we should analyze the financial statement and understand, of course, there are some important statements which just consist in the financial statements that's included balance sheet. As we know, the balance sheet is also included statement of profit and loss account or income statement. We can say all these are the statement which are included in financial statement. Well, cash flow statement, statement of changes equity. Well, these are the statements which are included in financial statement. When we mean that our financial statement, our mean are these statements we should understand comprehensively and entirely, then we'll get to know that financial statement analysis. Well, let's begin uh, the new topic, which is analysis of the financial statement, and we will go beyond that. Of course, financial statements, as I before and earlier discussed about the financial statement. Here, what is the analysis? The analysis is a systematic process where the information provided in the financial statement for this reason of what? For the reason of, you know, for the reason to sustaining or evaluating the business performance and financial position of a business. These are the elements we and factors that are playing key role in analysis. Of course, the purpose is for finances and statement analysis is financial, to find out the financial position, to ascertain the financial position and business performance, how the business is performed, whether it performed very good or bad, or maybe the performance is average, maybe there's profit, there's no profit, there's no loss. So we have to figure out the financial position as well. Is it the financial position that is good? Is the business worth is, of course, in a good train? Well, in analysis, we have to find these two important elements. Well, key terms or key elements which are included in financial statements are following. First of all, in income statement, what the terms we are using are important that has been mentioned, of course, and we are going to understand those terms which are very crucial for understanding because these terms are usable in preparing income statement. Well, while we are going to prepare the income statement, we should know these terms. Sales revenue, like sales revenues, refer to total income from selling goods and services, and cost of sale, which mean cost of goods sold, direct cost of producing goods and sold, which mean we have incurred some cost related to the producing of that goods we have sold out. Gross profit is equal to sales revenue minus the cost of sale. The sales revenue, we know already that sales revenue is all the sales that without minusing, deducting all any expenses. So from sales revenue, we are minusing the cost of sales, which the cost has been incurred in the sales of producing that good. When operating expenses is referred to rent, yeah, salary, utilities, administrative expenses. All these are the operating expenses. Without these expenses, you cannot operate a business. Well, this is called what? Operating expenses. So, this is truly important that we should understand these elements because the terms. Um, Operating profit. What is operating profit? Operating profit are earning before interest and tax, or profit before interest and tax is called. So this is what we are understand that we should know because the earning before interest and tax is what we are saying the operating profit. And interest expense, that's what we have, borrowed money from the bank. We, along with our borrowed money, we are paying the interest. That interest is called what? That is a cost of that borrowed money we have to pay along with the borrowed money. Some certain percentage, maybe 8%, maybe 10%, maybe 6%, maybe 10%, maybe 6%. That's depend on the bank rules and their policy, what the cost or the interest rate they are going to levy on the uh, lending their money to a certain person. Well, tax expense, we have to know the tax amount that paid taxes, that you are going to pay the taxes to the government or entities, to any entities that are uh, collection and they're responsible for the collection of the taxes. So that's also expense you have to pay. After deducting all these expenses, we have the net profit, net income, also it's called the final profit after all the expenses. So we will have that, and that is what we will going to have the money in our hand after deducting all the expenses from the business. So let's move on to the next topic. Well, here we have a balance sheet. Well, what's a balance sheet? First of all, we have to know the balance sheet. Balance sheet is a financial statement, it show the company's financial position. Of course, the financial position of a company. This financial position. Financial position is important at a specific point at time in a time like maybe balance sheet for a specific time, maybe that could be quarterly or maybe yearly balance sheet. So that depends on the company or the organization that what time they're going to set up for the preparing a balance sheet and what time, maybe monthly. So there's no that depends on the organization. We certainly say that it gives a clear picture of the business owns like assets, owns, and liabilities mean, and the owner's equity. We'll discuss about in owner's equities as well. The clear picture about what, how much your assets do you have? Like assets, you have your asset and your liability is going to be analyzed here, and we will know that is it your asset is more or your liability is more, or maybe your liability is less or your asset may be more. So we are going to know that and balance sheet that if your asset is more, which means your financial position is really nice and awesome, so you're growing. um, when your liability is lesser than asset. If your liability is more than your assets, so that's certainly you are in loss. So that what your business picture is going to clearly show in your balance sheet. So terms in balance sheet, we are understanding, that we should know that what are the terms that are usable in balance sheet. Those are the assets, which mean we divide into two parts. That's clearly we know that is of course, current asset, current assets, and current assets, which mean cash, inventory, account receivable. Non-current assets, well, it is property, equipment, long-term investment. Current asset, which means it is usable and within 1 year, within when we are going to receive or we are going to pay. Maybe we are purchasing something. That could be inventory and stock, whatever that, and the cash we have, or we have in our bank account some cash. Sorry, we have some amount in bank account. We are using that within 1 year. But when it comes to non-current asset, it is used for long term, which means it's more than 1 year. That's property, equipment, property maybe your land, building, whatever that is. Equipment, maybe machinery you are purchasing. That's a car. Non-current is not usable for 1 year. It's beyond the 1 year, maybe a 2, 3, 4, 10 year. That's not certain that how long it will, uh, maybe how long you will use that. So how long it will prolong for you in that's certainly not clear. And long-term investments, and that's also like not for 1 year or 2 years. That's not certain. That's what we are thinking about. Like when it comes to non-current asset, non-current asset is beyond the 1 year, more than 1 year. For that reason, we are called that's non-current asset. Liability is similarly like it's the current liability and non-current liabilities divided into two. Or the current liability, like account payable, we should pay the money. We have purchased something, we should pay that. That's we are all we have to do. That's our obligation. Short-term loans, maybe if we have mm, borrow money and the loans along with that, we are paying that interest to the bank within 1 year. That's what we are saying that current liabilities and non-current liabilities are long-term loans, bonds, maybe more than 1 year. We have borrowed money, so it's more than 1 year. That's obligations you have to do and you have to pay that. And so then that's the part of the long-term loans and non-current liabilities, which is more than 1 year, that obligation upon you, and you should pay for that for surely. And equity, owner's capital, shareholder equity. Owner's capital and shareholders retain earnings and drawings and dividend. Owner's capital, it is the owner's a capital, that initial capital that he is going to invest in the company, or its initial amount of the investments in the startup or the business. Of course, the shareholders equity, the part of the shareholders that they are going to purchase, that he's going to invest in that company or that organization. Retained earnings, maybe retained earnings, that and the profit you have to retain, or you um, do not use that, this kind of deposit you are retaining in your hand. I mean, you do not spend that money after the profit you are going to earn, and drawings that you are using for personal purpose from your business. Maybe you have a business, you are taking some cash from your amount of the business that you have invested in, you're using for personal purpose. That's what we are saying, the drawings. And dividends is a profit that you are going to pay a part of the dividend to your shareholders, some percentage. Maybe you have earned $20,000 and you are going to pay $5,000 to the shareholders as a dividend, part of your profits. Well, let's go beyond that. And here the terms in cash flow statement. Well, cash flow statement, what's called a cash flow statement? Cash flow statement is a cash flow statement is a financial reports. It's a financial the how cash moves in, right, and out. How cash moves in and out, or a business or a period or a specific period, right? So it helps to track how company generates and use the cash. Of course, cash flow statement is a really crucial for managing of cash when it comes to cash. That is the report, that clearly show that how the cash is goes out, comes in, or cash flow in outflow inflow. The movement of cash inflow and outflow in a business, or a period of time or a specific period of time. It helps the companies generate how they generate the money and the use of cash. So cash from operating activities, we have cash generated used by the company's core business operation. For the business operation, we are going to use that cash, and cash from investing activities, the cash which is used for generating long-term assets. When you are when that we invest the cash and that has been generated from, or use the cash for purchasing some long-term assets, maybe property, machinery, equipment, whatever, or maybe investment. So whether you use that cash, or maybe whether you generated cash from the long-term assets. Here we have the cash from financing activities. In finance activities, it is, of course, cash flows between the company and its owner or creditors, like issuing shares, and debt, and paying dividends, repaying loans. That's where, like, saying that it means that cash from financing activities is cash between the company and its owner, or the creditors, for sure. Issuing shares and bank dividends, whatever, so on. Uh, we have to know that, and that's what we are talking about. Okay, let's move on to the next page. The next page. Okay, why financial statements is important? Why it's important? Why we are to use the financial statements, what are the purpose and why we use it, and significance, all of those we are going to talk about here. So the financial statement mean that essential because the helps businesses, financial statement investors, creditors, stakeholders to understand the financial condition for business. However, the significance lies not only in the preparation of financial statements, but it's also their analysis and interpretation. What does it mean? It means the fan is a very, crucial, necessary to have a financial statement to whom, to investors, to creditors, shareholders, to understand the financial condition of a business, which means it does not only, important that it's not only related to prepare only financial statement, but also it is really crucial, analysis and interpretation. Preparing of financial statement is not the end of the matter. Suddenly the financial statements require the important analysis and interpretation. Well, for instance, I can say financial statements, what gonna do for us? Financial statement, when we have financial statement analysis, and why we use it and why it's important, because we critically examine in making the relationship in the figures. When we are in figures, if there are different figures in the financial statement, the figures of financial statements. So when we have those figures and we are making the relationship, which means, in fact, of course, the process of making a relationship in the the figures of financial statements. Of course, that's what we are saying, that's analysis of financial statement. Interestingly, a single, a single figure may not convey much meaning until unless the figure is compared with another one. Like if I can say, for instance, for example, if I say my business owns 5 lakh, or maybe earn 5 lakh, right? 5 lakh. Do you know, does it make sense? No, because there is no any other figure, only 5 lakh, earn 5 lakh. How in where this 5 lakh has been earned from your business, right? So it is senseless. There's no much meaning. It does not convey much meaning and does not convey full comprehension to the reader, and they might get confused this. So here what we are going to do, that we can say, if I say, while I say like I am getting 5 lakh, right? 5 lakh dollar, or maybe whatsoever amount that you are refer for the currency you use. 5 lakh dollar or rupees, or so profit on what? On 20 lakh, right? On 20 lakh, on 20 lakh, and I am getting this 5 lakh on 20 lakh, or maybe 25 lakh, right? I'm investing this 20 lakh in a business, and after investing, after doing my business and deduction all the expenses, all those amount, I'm getting 5 lakh as a profit. So I am making here right now the relationship between 5 lakh and 20 lakh. These two are figures I'm comparing with each other, right? And I'm making the relationship between two figures without, if I could have said I've earned 5 lakh money, all right? And I don't know, nobody know that from where you have made this 5 lakh, where you made this 5 lakh, how much amount you have invested, then you make this 5 lakh. Certainly, when I have another figure that can be compared with this, and then we will get the result certainly about that as well. So that means the making, you know, investment and then getting the amount uh, that will show the results of our activities in operation. So here in financial statement, we are going to make the relationship between two figures. Making relationship between different figures in financial statements is why we make this relationship. There's a, a question mark why we make this relationship, right? Because this information can be used in taking decision, right? Decision who the managers or the organization who are gonna make the decision by analysis of the figures that are included and that has been written in financial statement. So, so this is critically important in decision making. For that reason, we are making this relationship. And so while we appropriately take the decision and analyze that, so we have understand that what is financial statement, why we make this financial statement analysis, why it's important. I hope you understand that has, it's just showing a clear picture for us to know. So let's know what the significance of financial statement. Financial statement assessing the financial health of business. Of course, you know the worth of business, if the business is going in a loss or in a growing. So, what is the condition of the business? Informed decision making. Of course, when we analyze and we make the relationship between the figures, understand the contrast and what's have been, you know, growth, or maybe that could be a loss, and we then later on we take the decision. That could be, after critical examination and understanding and evaluation, then we will take the decision seriously. perform evaluation. Yeah, performance, whether our performance is good or bad. So that will clearly show and financial statement. So the financial statement, that's what we are, saying that is really crucial to analyze better. Compliance and legal requirements. Compliance and requirements, which mean we follow up the um, legal requirements, which mean when it's come to using the statements, whether that could be for our legal requirement, even though that when we want to sell our business, we have financial statement and we can show to the others, maybe the investors, they are going to take the decision, or maybe our we are the file has been against our business, and we can use this financial statements to the core. So for compliance and legal requirements is really crucial financial statements, strategy planning. So planning is crucial, and making a planning, decision making, um, that's playing important role when it comes to financial statement for a business. Well, let's move on to the next topic. Um, What's the next one? Of course, the importance. We have the importance of financial statements. What are the important assessment of past performance by financial statement? We can assess the past performance of the business, whether last year our business was in a growth or in a loss, or we can compare our past data to the present data and the present performance and last year performance. So, I mean, that's a very important in financial statements that show us the performance of the business. Of course, assessment of the current position, what is the current position of our business, is it good or bad? If it is good, then we are going to take the decision, or it is bad, then we know that what should we do is we change the policy, we change the policy, then later on we adopt um, the new rules, or maybe we take care of the our business, that our business position over this declining, or not in a good position, not in a good perform. So if that's the happening decision of a business, we will take care of our business and our policy and our rules and whatever that could be, until we bring a stable position to our business, and we will accordingly take the decision. Assessment of earning capacity and future growth. We can assess the earning capacity, whether our capacity is suitable or reasonable, or maybe the future growth is in our hand or not. We will understand, and we can take informed decision as well, and we can understand well by financial statement future growth as well. Well, based on the past data and the evaluation of current business position, we will understand the future growth as well. Assessment of the solvency. Solvency, that refers to the ability of the business to pay the debts. Solvency, which means the the long term. Of course, long term debts we are able to, or the business is able to pay the long term debts. So, the capacity and ability that businesses have. If the solvency is good, then we know that our business position is really good. If the solvency is insolvent, then our business position and capacity is really bad. So we are ascertaining by financial statement. I mean, we have, and we will get to know that solvency position of our business. Good solvency, it means that all the debts are paid on time. Bad solvency, or of course, mean that businesses find difficulties to pay the debts and predicting the bankruptcy and the failure. Well, we understand the good solvency and bad solvency. Good solvency is that business is able to repay their obligations, and bad solvency is that business is getting failures and unable to pay the debts on time. A business will not be collapse, suddenly, but slowly and steadily will sink because it becomes a bankrupt and means that insolvent is not able to pay. So when the business is not ready to pay its all obligations or debts, you know, suddenly the business will steadily or slowly, gradually will sink or will bankrupt. Literally, the business will be, insolvent. Of course, the business operation will be stopped due to the inability to pay their debts to the concerns party. Well, so this financial statement analysis will help the management as well to finding so whether our business is business being going to become a bankrupt or going to become insolvent. So only using the help of financial statement analysis and assessment of managerial efficiency, then literally we will understand what's the business position is right now. Is it going to become insolvent or going to become good at financial strength? Well, maybe uh, strength, or maybe increase the strength, or maybe that strength getting you know weaker and weaker. The position of the business is really crucial, and necessarily we have to evaluate that for our informed decision making as well. Well, financial statement analysis, it's really crucial. Uh, that's why we are thinking that we have to know before we are taking the decision that analysis would bring us information. Well, and other importance or assessment of managerial efficiency, of course, the management will use um, and it will show clear picture of the effectiveness as well, efficiency of the business, the operation, whether the operation is good or bad, whether our businesses have a good efficiency in controlling the cost, maybe the expenses or profit, able to meet all the relevant expenses to the business organization, are able to pay all the salaries, brand, and everything, and we are making sure that we have good effectiveness in managing and controlling our expenses or maybe losses as well. All right. Interfirm comparison, which means one a company like company A and company B. We are going to what? We are going to compare these two company. This and this. When we have, it's important financial statement. When we have a financial statement, we are going to compare. We understand whether our business performance is good, and with other company, other company has been working similar and business, and there, if you're going to understand the comparison, growth or decline position of our business, decision making, of course, decision making is crucial. That when we have a good financial position, a better financial position, we're going to know that literally that what kind of decision we have to make it in favor of our business that survive long term. Well, we understand all these, the importance of the financial statement. I hope you understand. If you have any doubt, please make a comment. I will get back to you soon. Well, let's move on to the next topic. Managerial use of financial statement analysis. What are the managerial uses of financial statement analysis? Well, here are few important managerial uses like financial statement depicts the financial results and useful for identifying and progressing of businesses. The manager used to how the business is performing, and elevate the performance of a business to find out the results. And manager will use the techniques of financial statement analyze in order to take decision, elevate the financial performance of a business, which means when you have the manager uses that the financial statement of manager uses that of course the manager will understand the use of how and who know the business performance if it's good still or it's bad, maybe not. So what I mean, which level and which condition our business is performing, so they can bring the changes as well in for our business to perform really well and evaluate, elevate the performance of the business and to find out, of course, the results of the business operation. um, well, that's what the financial statements could be used in decision making as well, and to use for managerial purpose. Well, the other one which we are going to know that financial system analysis is there are many techniques to analyze. Well, then there's a trend analysis. Of course, the trend analysis is studying the trend analysis. The management can be able to find out the trend, maybe in uptrend or maybe in downtrends, the changes which has been taking places, the directional changes, maybe the performance of businesses, of course. You know, that remember that the performance will not be stagnant. As I said, that maybe that will be in a growth, or maybe sometime it could be in a decline. It could be in a decline, maybe in an uptrend and maybe downtrend. So whether the business is showing, growing trend or maybe declining trend, that's can be ascertained with trend analysis of business. So profitability and financial strength can be, ascertained by comparative analysis with the competitors and industries in average planning of the next year in comparative analysis. Of course, we can make a comparative analysis with the other businesses. Uh, well, that will help us to make an informed decision for the next year as well. Through that analysis, the strength and weakness of our position of financial position of our business could be analyzed, and we can take a decision appropriately in upcoming years. Well, long-term investments basically, depends on the fundamental analysis. Of course, fundamental analysis essentially the performance of the business and the position of financial position of the business, as I discussed earlier as well. Um, so I hope you understand that as well. Let's move on next uh, to the next topic here. To the next part here. So many long terms. There are some so many things that we understand. The financial statement before the making decision making investment as well, and we have to find out the financial position or results of the operation of the financial position as well in the business organization. So financial statements analysis helps, users of the financial statement to make a prudent decision, as I discussed and I said before. The decision, informed decision, prudent decision is important. So without having the proper informed decision, we cannot take a clear and good, decision in favor of our business. Maybe if we do not have that clear picture of the business, then how we will gonna make clear decision, an informed decision that will really bring difficult and situation in our decision making without having informed uh, better, you know, information if you do not provide. So that's what we are saying, that financial statement provide comprehensive analysis and comprehensive understanding to the businesses that the financial statement will um, really provide to you, that whether how you're gonna make a decision. So it generates information which is useful to the users. Users mean managers, of course. So the managers your useful information this that will provide. For instance, I can make the analysis in the past and future project, as I before said. that financial statement analysis will help to provide to manager to analyze the future and present, uh, future projections, past and present, and that will usually make a informed decision for the future. And maybe that manager could analyze in the future trend of the business as well, whether our business is going to grow and maybe if our business is going to decline based on the interpretation and critical examination of past data and information which has been provided in financial statement. I hope you understand. Till now, I think the video has been, longer and got longer. So I've got so many, details here related to financial statement. I hope you understand that, and whether if there's any, you know, problem, maybe you didn't understand any topics and it's part of this video. I hope you get to know if still you are getting confused or you have any problem here. Please write below in the comment section and let me know where you didn't understand, which part was really critical to you, and I will bring you updates. And so just let me know, I will clear your doubts, uh, of course. So thank you so much for watching this video. Hopefully you got some concept from financial statements comparatively, um, previous and maybe even previous video. I didn't cover all the topics and related to financial statement, but still we have a lot of things and a lot of stuff we have to cover in financial statement. It's a really huge interpretation and analysis. So later we are going to talk more and more details. So this is enough, and we have talked a lot, and hopefully you understand our financial statement analysis and about the need and importance of financial statements, why we use and why the importance of financial statements. Well, you will of course understand some terms which are used in balance sheet and income statement or profit and loss account, and you understand the relationship we are making in a financial statement. Based on that, we are making the decision. We are critically examining the financial statement. The only preparation of the financial statement is not the end of the matter. The, later on, it will start, and when we have start the critically examining and making the relationship, and beside of that, the interpretation of the financial statement that will bring us inform information, and well, that information will use to make appropriate decision, and we will be able to project the future, the future trend, the future growth of our business. Hopefully you got everything in this video, and stay updated about the fans, and we will get back together and we will learn more and more. So thank you so much. Have a good time. Bye bye.